Hey everyone, Brett here. I'm going to talk a little bit about scalping in this video today. I want you to get the basic idea behind it and some of the strategies involved with it. As you're aware, I have won the scalping contest last year, and so I will be defending that title this coming week, and it will be on my YouTube channel streaming live, so you can watch it there. Hi everyone, today in this nice weather we're going to talk a little bit about scalping with the upcoming scalping contest that you've seen that I am in. I've got to defend my title from last year. So when I start with my new students, there is always a tendency to want to just be a scalper. Okay, that's very normal. All new students just want to get their feet wet, just want to take a little dip in the pool and get their foot wet and then get out because they're nervous in the market. Okay, that's totally normal reaction due to a lack of experience, and that's fine. Now, defining scalping, it could be anywhere from, going for a trade for, 15, 30, 45 minutes, maybe an hour, and maybe just going for, say, 5, 10 pips, maybe less. I've got a couple of good friends that are hardcore scalpers, and they will typically even go for less than that. So it all just depends on your style and your situation. And so yes, this coming week I will be in the contest, and I will be straight up scalping. Now, those of you that are former students of mine that are in the live market, you know this isn't really my thing. And those of you that have watched other videos of mine, you know that I'm really a longer term day trader. That's what I prefer to do because it lends itself, in my opinion, to a significantly easier, less stressful lifestyle with regard to trading, because you don't sit and watch every candle when you do day trades. You just put it in, and I'm kind of known as the set it and forget it guy. Okay, so those of you that have been around or coached by me, you know that. However, with regard to scalping, it is not a bad idea if that's what works for you. Okay, there's certainly a place for it in the Forex market. And when you define scalping, there's any number of ways that could be defined. It just generally connotates that you are going in and out of a position in the open market in a relatively short period of time, and you're only going for a small number of pips. Okay, that's the generally accepted definition of scalping. Now, if you want to define what that means exactly, again, everyone has their own definition of how many a few pips is and how long and so forth. But most scalpers will do multiple trades in a day, and the idea is to get in, get a quick profit, and get out and repeat the process over and over. So that's what I do, coach people on the scalping techniques that I have used to win the contest and so forth. But in all reality, I only scalp if I happen across the right signal at the right time while I'm out looking for a normal trade. Okay, I don't sit down ever with the intent of, okay, I'm going to scalp, unless in the rare case of a major news event, such as I very much scalped all night the night of the Brexit vote. That one took me by surprise because the vote, and it took everyone by surprise because the vote went the other way. But also the night of Trump's election, and a couple of other major news events that caused wild movement in the market. Then I would sit down with the intention of scalping. But under normal circumstances, I'm a day trader. I'm going to take 1 or 2 trades a day, maybe 3 at the most, but never at the same time. And then I'm going to let them go until they take profit. And I'm going to be going for more like 30, 40, 50 pips at a minimum, or it could be 2 or 3 times that. It could be 100, 150, 200. And now we're back to kind of implementing the bounce back strategy. So that's where I'm at. But if I'm in the market or I'm coaching and I can see that there is just happen across the right signal at the right time, which naturally if you're in the market a lot, that's eventually going to happen, then I will take a scalp without any question. And I'm going to look at my same indicators that I'm looking at for a day trade. However, I'm going to be looking at much shorter time charts, right? Because I'm really not looking to set it and forget it. I'm really just looking to put it in, keep my eyes on the screen for a little while I'm on the phone or while I'm coaching or something along those lines. And then I'm really, probably in most cases, I'm not even going to use a take profit, not even going to use a stop loss. I'm just going to wait until I'm happy with how many pips I have, and then I'm just going to get out manually, not by setting it up with the broker and letting them do it. So that's where I come in on the scalping thing. Again, I know most of you know me for doing the bounce back strategy, and that is what I do. I'm a long-term trader. Of course, with Eric, we bring in the bounce back strategy, and I've got a few other items that I implement as well. I've always been a big fan of support and resistance. I do channeling. I use my Fibonacci tool. All of those things in conjunction with bounce back, the stuff I've been doing for years before we even had the bounce back. Okay, but in the scalping, I will this is how I want you to visualize it. If you're going to scalp, you need to think about taking a small target inside of a larger one, okay? Because the point is this: if you screw it up with the small target and it doesn't go your way quickly, and it quickly goes against you, you want to have the long-term indicators in your favor. Okay, be very clear on that. Small target within a larger target. That way, if you get it wrong, because inevitably you're going to. I mean, I know some guys that can routinely do 10 out of 10 scalps in a row, but that's not realistic for new people. And you're going to have one or two go against you. And if you do, you're going to still want your 4-hour, your daily, those charts to at least to some degree be in line with the direction of your trade. So, in other words, when I do day trading and my normal longer term strategy with the bounce back, I am essentially not concerned about catching the initial direction. Okay, I'm not concerned about that because I know where it's going in the long run. All right, but when you sit down with the intention of scalping, you've got a different approach. You've got a different mentality. And what you're going to have to do is you're going to have to be more concerned about your short-term indicators, your 15, your 30-minute, your 60-minute charts, and what they're telling you. And then what you want to do is still have the longer-term ones, at least to some degree. You can't have everything line up for you on every trade. It's always a balancing act of how many things are in your favor versus how many things are not. It's never going to be 100-0. And if it was 100-0, you wouldn't want that trade because it was about to reach exhaustion and it's going to turn around on you. But, so I don't get ahead of myself here. On the shorter term aspect, that's what you're going to base your decision off of. Your shorter term charts, putting a priority on your more short term indicators, shorter term candles, and going for a lower amount of pips and planning to be in and out in a fairly reasonable amount of time. And you're more than likely just going to keep your eyes on the screen, because as soon as you see something start to go the other way on you and you've made your 5, 10 pips, whatever it was, you're out, you're done, and then you look for another signal on another pair that is just in the right place again to grab another 5, another 10 pips in a quick manner. You're not going to let anything run, but I just want you to be prepared for when those ones that go against you do come, and they will come. I want you to have at least, your 4-hour, your daily, even 8-hour, some chart along those lines that gives you some indication that if this trade goes bad, you still can just wait it out. Which leads us to not over leveraging yourself, okay? Always make sure, my students know this backwards and forwards, that you have to keep your lot size appropriate for your account balance and therefore for how much margin you have to work with, okay? And so that way, when the scenario plays out that, hey, this one's gone against me, I'm going to have to wait for it for a little while. Now what you're going to do is you're going to want to still take scalps in the meantime, okay? But if you've over leveraged yourself, you won't have enough margin to do that. So always keep your lot size appropriate, which we could probably talk about on a whole nother video in regards to that, with regard to your account balance and how much margin you want to keep at all times. But make sure that if you have one, even two trades go against you all at the same time, that you still can afford, you have plenty of margin to wait those out, to turn around and go your favor, or you may just decide to take a loss, whatever the case may be, but that you have enough margin available to continue to take other scalps that you may find in the meantime. That's where the key is, because if you've over leveraged yourself on one trade and it gets in trouble, or it requires more patience and you have to wait for it for a little while, then you won't be able to take the other good scalps that might have been a quick 5 or 10 for you, because you don't have the margin to do so. So I want you to avoid that pitfall, and we will call that good for today, and we will talk more about appropriate lot sizes in relation to your margin and how much margin you should keep available at all times on another video. All right, everyone, take care.
Time is barely on our side. I don't want to waste what's left. The storms we chase and lead.
Hey everyone, if you want to learn more about the bounce back strategy, join our Facebook group or subscribe to my YouTube channel, FOREX Slayer.